The Indian rupee has shown signs of recovery after months of depreciation, gaining 2% from its February lows, following a 4% decline between November 2024 and February of this year. Now, the currency has rebounded due to improved foreign inflows and stronger domestic equities. While volatility still remains, experts suggest the worst phase of depreciation is now behind us, with the rupee expected to stay within a stable range in the near term. India's foreign exchange reserves have also strengthened, reaching $654.27 billion as of March 14th, marking a 3-month high, although the latest increase of $305 million is modest compared to the previous week's sharp rise. It reflects the Reserve Bank of India's active interventions to manage rupee volatility. The central bank has been selling dollars in the spot market and conducting forex swaps to maintain liquidity. Now, the rupee's outlook is influenced by multiple factors, including global interest rate trends, foreign investment flows, and India's trade balance. So while the currency is expected to remain range-bound, a gradual depreciation towards 88 to 89 per US dollar by year-end is likely. Now, on the economic front, India continues to show resilience, supported by steady growth, strong foreign investment, and a stable macroeconomic environment. However, inflationary pressures and external risks could pose challenges. The RBI's proactive measures and sustained economic momentum will be key to ensuring stability in the rupee and broader financial markets in the months ahead. All right, for more on this, I'm now being joined by Ms. Mithali Nikor. She is an economist and the founder of Nikor Associates. Mithali, always a pleasure having you on World Business Watch. Thank you so much for joining in. What factors do you feel will determine the rupee's trajectory in 2025?
So I think when we look at this entire situation, the first and most important trend that this is reflecting is actually the meeting between Prime Minister Modi and President Trump. Because, what that meeting actually signals to the entire global equity and debt markets, as well as currency markets, is that President Modi has actually continued his strong relationship with President Trump. And there's a clear policy direction that has come between, India-US trade, which is to actually touch $500 billion by 2030. That's the target. So now when you signal such a strong macroeconomic trend, the rest of the assumptions can then be factored in a very, predictable direction. And if you see the rest of the global markets at this point in time, the predictability is extremely low. The rupee, in some senses, despite being a bit undervalued, is offering predictability. The second thing is, of course, exporters are benefiting, IT services are benefiting from a cheaper rupee, which is very critical at this point in time as we see an AI transition. India's most important exports continue to be IT services. And IT services are hit by this AI transition. So I think, somewhere when we're talking about the rupee, it is important to look at the economic fundamentals of what is driving the demand or supply for the rupee. In the short term, the RBI has managed this volatility, but in the long term going forward, I think the rupee still represents a, stable currency amongst emerging markets. And I do see a lot more, demand for the rupee coming in, particularly from Indians settled abroad who might want to come and invest in rupee-denominated government bonds.
You've mentioned it briefly. If you can just elaborate further, how effective do you feel the RBI's intervention has been in stabilizing the currency long-term and short-term?
No, I think the RBI has certain ranges in mind. I mean, at this point in time, the RBI had to allow some depreciation because at this point in time, that reflects the true condition of the market. I mean, the dollar, this is not actually a reflection on the rupee, but rather on the strength of the dollar, right? Because there are a number of investors, financial investors, who are fleeing to safety when it comes to the dollar, and the dollar demand is at an all-time high. So that, somewhere the RBI has to balance that. And of course, they've done a phenomenal job, with that balancing act. But also somewhere we have to realize at what point does the RBI stop intervening? And I think they've made the right call that, let's stop intervening now when we're seeing a little bit of stability coming in from the, macroeconomic cues. And therefore coming in and saying, okay, we can stop the action now of selling dollars in the market.
Mithali, as far as the effects on the Indian rupee is concerned, it comes from different factors. At this point, what impact do you think global interest rate trends will have on the Indian rupee going forward?
So I think, that's a little bit of a complex dynamic because when we think about the global interest rate trends, the US is holding its interest rates constant for now. India has again, I mean, India, of course, lowered its interest rates, but it is planning to, have maybe another round of reductions. And plus, on top of that, we can see that the UK and Europe are really moving towards, interest rate cuts for sure. Now, when there are interest rate cuts in any big market, apart from the US, which already did its interest rate cuts last year, we see rise in inflation and a rise in spending power, and that means that again we could see a little bit of volatility on the rupee, a little bit of plunging demand when it comes to rupee, and again the rupee kind of falling somewhere against the dollar because a lot of these assets which are getting this increased liquidity will run towards the dollar. Overall, at this point in time, when we look at the global market, the demand for the dollar, I mean, even from British investors and European investors, and even Japanese investors are interested in diversifying towards the dollar. So I think that is the main driver of the trends, and we have to really see how the rupee holds up in that stand. And I think it's the real economy. I always say it's not the financial economy, it's not these overnight interest rate trends and other things, but it's actually the strength of the Indian economy that's going to hold the rupee steady in the long term.
Rightly said. And Mitali, as far as the risks are concerned, which are the biggest risks you find at this point to India's economic stability going forward this year?
I think the first and most important risk for any emerging economy, and India is no exception, is really around the tariff regime in the US.
Understood.
I mean, I think the fact this is we've spoken about this number of times. But the second and unique risk to the Indian economy actually comes from how we manage the AI transition in the Indian IT industry, because Indian IT jobs are definitely at risk when we look at AI substitution of jobs, and there are a number of routine jobs that are getting automated. But what India can really do is become a leader in the AI space. And in order to become a leader in the AI space, it needs to work much more closely with American companies as well as with other global companies that are on the forefront of the AI transition. And I think that is a unique risk to the Indian economy, which a very few people are realizing. Because today, when we look at employment statistics, more the big five IT companies employ more than the Indian railways. So today the overall contours of the Indian economy are heavily dependent on the IT industry, and we really need to be at the forefront of the AI transition.
That was Mitali Nikor joining me from New Delhi. Always a pleasure speaking with you, and lots more to discuss going forward. We'd love to have you on the show again.
Thank you.